Collecting $300, risking only 200? This can't be right, can it? Well, hello. My name is Eve, also known as Fans After 40. Today we're gonna go over credit iron condor. Nvidia is just one example. Let me close this window. We're gonna go over the iron condor screener on market Chameleon and see what we see, especially now in this crazy couple of days that everything is going down and then correcting and all that stuff. There's possibilities to make passive income by selling, if you watch the last video, selling put options. But now if you wanna basically hedge your risk and stuff like that, and you like the condors, so you sell spreads on two sides, there's an option, there's a screener for iron condor. So we're gonna do this. And if you just wanna check the iron condor that I was just paying attention to, it's this one. Credit iron condor, collect $300, risking 200. Usually it's the other way around, but volatility is insane. So usually you risk like 300 to collect 200, and now it's the other way around. That tells me that this is the time to sell options. So let's get started with Iron Condor screener, which is right here. Go to screener. Okay, and in here in Iron Condor screener, change to this one, Iron Condor short inner long outer. I'm gonna click here. Okay, and before we're gonna do all the filters, we're gonna basically read a quick disclaimer. So here you go. Feel free to read and know that this is not a financial advice. I'm not a financial advisor. This is for entertainment purposes only, education purposes only. My name is Eve, also known as Farms After 40. I think I said it already, but either way, let's get started with Market Chameleon and the Iron Condor screener. Many people love to sell spreads, credit spreads, either put spread, call spread. I like to do that as well, and I also like to do the credit iron condor because you make income twice, but your margin and buying power is basically the same. And you see here the outlook, stock price stays near the current price. So if your assumption, well, I'll tell you my assumption. As again, my assumption is the market, it's not gonna go down forever. It went down a lot last week. It will correct and correct midday. You see here, let me make it bigger. It was negative 5%. Now we are negative 2.5%. So eventually it will stabilize. So all the people that got in short at negative 5%, like in the morning, they bought put, they're gonna lose. And all the people that see, hey, the price is correcting, they're buying calls, they're gonna lose. Eventually, nothing will happen and it will stay the same for a couple of days until the next move, either up or down. I don't know. But I'm betting on a cool environment where prices are not moving and all the insane premium and theta will decay and the option sellers will win once again. Something to consider. Feel free to read about it. Credit iron condor spreads is selling out of the money put spreads, selling out of the money call spreads. So you're getting paid twice because you sell two spreads. So let's do the filter. We're gonna change this to best by theoretical edge plus 70% win rate. See what we got first of all, because if we don't, you see here we got over 1,000 pages. I don't want 1,000, I only want the best of the best. So let's start with this, okay? And we're gonna change this to, I can do the Nvidia one from the beginning of the videos for the next couple of days, super risky. I mean, up to you. So we're gonna change this to 30 to 60 days to collect even more premium, especially now with high impulse volatility. Now we got only 8 pages compared to 1,000, which is much better. Now I want only the stocks that I know, so let's see what we got. Best by theoretical edge, all that stuff, maximum gain, percentage, earning, company event, do we have before expiration, after, okay. Uncertain, any positive, I want above 10% theoretical edge, okay. That's just me, you can play with this filter as well. Now we're down to 5 pages, and now I'm gonna sort by market cap, which I think it's already sorted, so I'm gonna click here, and now we're gonna see what we see. So let's do that. So the first option that I see is Microsoft right here. No need to open that. Okay, let's go back. Microsoft, 400 bucks, 398, down 2.3%, free trillion market cap. So what's the Condor basically? So we are at 400. It tells you basically the put side, you sell the 380, you buy the 350, and on the call side, okay, so 15 points either way is you sell the 415 and you buy the 445, so that's about $3,000. It's a little too much for my blood to risk 3,000 minus the income, which is 1,073 compared to 750. So again, this is where Market Chameleon shine, and of course 7 days link in the description. Okay, but you're collecting over $1,000 compared to 750. Let's see if we can collect a lot more. Let's go by theoretical edge. Okay, let's see this, and then 52%. There we go. Toast. Remember Toast from the other video where we did, what was it? It was the price 23, 24, and you had like 18 strike to sell the put for like 30% cushion, something like that. So let's see what Toast has. Again, I'm not recommending those trades. I'm just giving you an idea what you can expect. So basically right now the trade itself, if the price is 23, tells you on one side to sell the 23 put and simultaneously buy the 20 put, and on the other side sell the 27 and buy the 30. So you're risking 300 minus the income, which is 170. So you're collecting compared to 100 bucks. You're collecting 170 bucks compared to 100, and your risk is 130. You're only risking 130 bucks. That's how crazy it is, because volatility is up to the wazoo, as they say right now, and it's all for expiration in September, as you can see most of this, and after earnings, and there's a lot of stuff, but you got yourself risking 130 to make 170. Again, usually it's always the other way. Let's see, Aveco, Broadcom, okay, that's the electric stuff. Price 140, 650 billion. You collect $900 compared to 535, let's say. And if the price is 140, you basically, so they're betting on a little correction in here. So you sell the 138, 121, and on the other side you sell the 154 call and buy the 171 call. So that's a $17 spread, so 1,700 minus your income, which is 900. So you're collecting 900 while risking 800. That is absolutely madness. You're collecting more than what you risk. And Intel, oh my goodness, they fell a lot. Now, I don't know about you, but let's see what Intel has to offer us. Price right now, 20 bucks. And the spread, okay, so this is like a small account spread. You sell the 1917 put spread, okay, and on the other side you sell the 2224 put spread after the earnings, after everything, for September 6th, a month from now, okay, 80% win rate, 43% edge collect. Look at this, collect $86 compared to 36. That means that you're risking 200 minus 86, you are basically collecting 86 bucks. You're risking 114. But in reality, because we have Market Chameleon, we know that this Iron Condor would only net you 36 bucks, and now it nets you $86. It's pretty good, pretty good, as they say. Let's see Airbnb next. We got a price of $24.66. You collect 600 compared to 280, more than double. This is very interesting to me. Let me see the trade. So you sell the 120 and 105 put spread, which is 15 points spread, and on the put, and on the call side we got 135, 150, so 15 points, 1,500 minus your income, so 900 bucks. So you're collecting that's pretty good. So you're collecting 600 while risking 900, but in reality you should have collected barely 280 while risking like 1,200 bucks. Let's refresh the win rate percentage. Let's filter by win rate percentage. And again, all of those can go to a loss, or it's up to you to go over those numbers, but just in case, let's see if we got something interesting. 90% win rate for WBA, which is Walgreens. Let's see if I'm correct and I didn't miss it. Yeah, Walgreens 1075 down 6.4%, 7%. So the stock price $10.60 something cents, and we're collecting $50 compared to $25. We're collecting double the income, and they want you to sell the 10 put spread and buy the 10 8.5 on the put side and 11.5 13 on the call side for September 6th. This is the trade idea, and basically this is $150. Basically that's what you're risking minus your income, so you're risking $100 to collect 50, 1 to 2 or 2 to 1, depends how you look. For September 6th, again, maximum gain $50, maximum loss $100, and you assume that Walgreens will stay between the lines. That's what it is for you. I mean, yeah, it's pretty good. You can scroll all the way. If you wanna just go by market cap, let's see like the big stocks, like the trillion stocks, and see if we got Apple or Nvidia or something. Well, Microsoft, as I talked about it before, but this was a little too big. Nvidia, $101 today. So this is interesting. So it's not the one from the home page. This is a little different, where you sell the Condor 94. 82 on the put side, and on the call side you sell the 122 134. Interesting. So as long as Nvidia stays between 94 and 122 by expiration, with September 6th after earnings, you basically collect $515 compared to 350, which is what you should have collected based on history. We got 70.8% win rate, theoretical edge of over 23%, which is awesome. Anything double digits over 10% is pretty awesome in my humble opinion. And we got Google. You can just play and see what you like, your favorite stocks. Amazon 162. This is the 160, 140, 170, 190. So you risk 2,000 minus your income, which is bucks. You risk 1,200, you collect 800 compared to 550. We got JP Morgan here. We got Visa, MasterCard, Costco, United Health, all the good names that we all know and love. This is Iron Condor. You are getting premium on two sides, but instead of just going randomly over Robinhood, you just go here to the Iron Condor screener and you find your edge, you find theoretical edge higher, you find win rate above 70%, and you play the odds, you play the probabilities, you play the numbers. Hope this was valuable. 7 days, link in the description for Market Chameleon if you're not a member already, so you can start selling options for income. See you next time. Yeah?